All right, so let's go over the kind of strategy to play the Qs here. The Qs, if you don't know, is basically an ETF of the Nasdaq 100, and we're actually going to be trading the TQs and the SQs, which are triple leveraged Qs. So basically trade three times more, or three times percentage wise as much. If the Nasdaq, the Qs are up 1%, the TQs are up 3, and the SQs are probably down 3%. So that's what I mean by triple leverage. So anyway, let's start with we're only going to use two strategies. It's really only, we're just going to use two strategies. So I'll go over them really quickly here and we'll get to the chart from today. So pullback strategy. We want three red bars trending, obviously pulling back into the rising 8 or 20 MAs. I use the simple MA, 8 SMA or the 20 SMA, and a green reversal bar. So a couple of things, we'd like that to be a smaller range reversal bar, so I'll show you why. We'd also like railroad tracks, which means that the 8 and the 20 are moving in the same direction in unison, almost like railroad tracks. It's a pretty powerful move, momentum tell. And heavier volume pulling back, I'd like to see that, so the sellers get exhausted when the three red bars come down and maybe it's time to buy. But these are all just kind of guidelines, but we're going to follow these rules to the T on the chart today, the Qs today, so you can see what happens if you follow this almost to the T. And then another one is our base breakout. It's pretty similar. We're three bars basing, which means they're just going to be going, they're going to base. They're going to base. Into the rising 8 or 20 again, and an igniting bar. And what I mean by that is we want, generally, when base into the rising 8 or the 20, there's some bar or maybe a couple bars that ignite up above the 8 or the 20, and then the 8 or the 20 becomes our support. And that's why it bounces off so much, basing or pulling back. And then other requirements, low risk to reward. A tight base is better. The sloppy bases out there. It's almost hard to define what a base is, and also railroad tracks on this too. When the 8 and the 20 simple moving averages are moving in unison, that's all is very powerful. So the trailing method we're going to use today, excuse me, this is an old strategy, or chart, but you can take a look at these if you want. But we're going to trail out immediately on the 5-minute chart. All we're using is the 5-minute chart with Japanese candlesticks to chart all this. So I'll show you on the chart. We're almost there. So when the first red bar's low is breached, the first red bar's low is the new stop. So anything below the first red bar that we see, which would be a down bar, we're going to sell. That's when we just get out, no matter what. So give room below the stop. General rule is 1 cent per $10 stock price. Basically, the TQs and SQs are in the 30s right now, so it's going to be about 3 cents. And I'll show you that when we get there too. And I always use a stop limit order. I don't just do it manually. I just update my stops and have them set, just so in case something goes wonky, I'm going to be out. So. Well, let's go ahead and get to the chart for today. All right, so let's go over the charts for today. We're going to start on the SQs, which means you're thinking that the market or the Qs will go down. We're only trading the Qs, as we talked about before. The SQs really means short the Qs, but you get to buy it, and the TQs means they're going to go up. They're triple leveraged ETFs. If the Qs is up 1%, the TQs is most likely up 3%, and the SQs are most likely down 3%. So that's why I mean triple leveraged. And the charts are mirror images of each other when we're talking about the TQs and the SQs. If you notice, they're pretty much a mirror image. And that's why it's a good learning experience to try and trade these, even small or paper trade, because you can take advantage of the different charts. Because if something is failing, you might want to go to something that, switch it over. The other one's probably succeeding or setting up. So let's take a look at the 2-day really quick here. Here's where we opened. Excuse me. Sometimes it gaps up or gaps down a lot, and it takes a while for these moving averages to catch up. These are still 5-minute bars, but it's just 2 days instead of today. So we're going to start with the SQs because the market actually went down a little at the beginning. So we're just going to start on this chart and see what we got. All right, so wild in the morning, always is. I used to wait 2 hours to trade. Sometimes I still do, or just kind of maybe even sleep in sometimes. I'm on the West Coast, so just to let it kind of settle down. I don't really know how to trade all this whack, you know. I mean, big bottoming tail here, red bar, green, green, and then red with a big bottoming tail, which means that it opened right here, got all the way down to here, and closed right there. So that's, you know, I don't know. Another red, no patterns yet. But here comes our first pattern. So we got a 1, 2, 3. This is our pullback pattern. And they're trending down, and they get a reversal bar right here. That's beautiful, except for the fact that it's not going into a rising 20, or this is our 8-day. This is our 8-day moving average, I should say. The purple one is 8, and the red one is the 20-day moving average. But let me explain to you how to enter one of these. Let's say we were to enter this at a different spot in the chart where it actually matched up. What we do is a reversal bar. You're just going to enter above the high and put our stop below the low. So on reversal bars, when we do the pullback strategy, you enter above the high, which in this case was 39.43, and I'd like to add 3 cents because it's a $30 stock, like I showed you in the beginning of the video. Just to make sure it kind of proves itself. So instead of 39.43, we'll call it 39.46 to enter. If it did trigger, the bottom was 39.22, we'll give it 39.19. Well, didn't trigger. Good thing. Not surprising either. But one good thing about this is, so this is failing, right? And it's pretty extended. We didn't get triggered. We weren't going to buy that anyway. But it's starting to kind of base on the TQs. So if I move to the TQs here, it ignited, and now it's above. It's just a mirror image. So now we're playing with a rising 8, and it's starting to rise or curling 20. Curling moving averages are pretty powerful too, but let's just try and go use our guidelines. Well, anyway, it started to base, and that was too big of a base. The idea of the base is when it does base and you want to enter in the base, that's not even really a real base, but you want to enter above the highest point of the base, and you want to put your stop below the lowest point of the base. In this case, that was, 20, almost 30 cents, more than 30 cents after the time we put our, 3-cent little give room in there. And also it wasn't a great base, and it failed anyway. So anyway, we're in no man's land again here. We got green bars, green bar, green bar, green bar. Well, you're thinking, why am I not in this? And the truth is, if there was one more red bar here, look, if this is a red bar and this is a red bar, and if this is a red bar, this would have been our reversal bar. So let's just pretend I didn't get in this, and we're not following the rules if we did, although it was a pretty good idea because these were 2 bottoming tails, which kind of shows strength to the upside, but forget about it. We're not in it, but I'm going to show you how we trail out of this. So the high here was 32.65. We're going to enter at 32.68. We'll put a stop limit order in. Then we'll also put our stop below 32.53. So to 32.50 would be our stop. Well, it actually goes, and there's a bunch of green bars. So, and this is excellent. So, man, at this point, we're just hoping it doesn't, we're going to take profits. We're waiting for a red bar. Here's our red bar finally. So the bottom, I'm not saying finally, but we don't want it to be a big red bar where it takes out all of our profits. So sometimes they're welcomed. The low here was $33. Let's give it 3 cents like we talked about for a $30 stock. So instead of 33, I'm going to call it 32.97. And it gets down to 32.98, almost stops us out there, which wouldn't have been bad, but it's kind of cool that it kept going up. So now we're just waiting for our next red bar. At the same time, we have our stop set here, no matter what. It's not going to change till we see another red bar. And we do right here. And the low is 33.14. We're going to put the stop at 33.11, giving it the 3 cents. And it doesn't get stopped out there. And here's our next red bar. We're going to go below that, which is 33.19. But we'll give it 3 cents down to 33.16. And then another higher red bar, 33.21. We're going to put our stop at 33.18 now. We get stopped on this bar. So we get stopped under this low. Now the reason why that's important is look what it saved us from. I mean, I guess it could have held on for a long time, but we made the profits were great. But we weren't in that trade, but you get the gist of it. So, okay, at this point now we're out of a trade. We're looking for something else. I see this. I actually tried to get into this trade. These are technically red bars. They're not really trending, but these three are. And then here is a reversal bar, a green bar, and here's the rising 20. The problem is, even though I did try and enter the trade, or I set an order and it didn't trigger, is this declining 8-day moving average is acting as resistance. It's not maybe as strong as the 20. That's why I almost tried to take it. So I did put an order here. As 33.12 was the high. Put an order in for 33.15, and it got to 33.11. It never triggered, and thank goodness. But you never know what could have happened if it did. I don't know. Gosh. So anyway, we're out of that. But that's an example where you got to be careful. There is a rising 20. It meets pretty much, meets our demands or our criteria. But yeah, this was just showing, hey man, it's trending the other way. And sure enough, it did, for sure. And then we got 1, 2, 3, 4 bars down. And then we have this bar, which could be called a reversal bar. But what I'm really looking at is now we're going to flip the page. We're going to go to the SQs, because this on the SQs will be kind of an igniting bar. And then we're going to have so instead of it dropping, trending down, we got this, to contend with. Now it's a rising 8, and at this point, the 20 is starting to rise too. Curling moving averages are pretty strong too. So what I was waiting for here, and I was drooling, is this was basing finally. You get some ignition. Really, you just want the ignition to get above these moving averages so they act as support when it comes back to it. Either it comes back to it through price and pulls back, or it kind of bases to it. So it's either waiting for the time or it comes back in price. And that's where, whenever it meets the 8 or the 20, in this case the 8, though, you're thinking, okay, there's going to be a move here. Well, unfortunately, it's starting to base beautifully. It doesn't get to the 8 yet or the 20 at all. And then this bar comes in, and just at this point, I'm thinking, that's not a base anymore. So I'm just forget about the trade, and I thought it would fail more than it did. But the interesting thing is, when you get a big bar like this, and it's down, and the next bar, 5-minute bar, almost cancels it out, that's actually more of a sign of strength than it is this weakness. I mean, buyers came back, and already we're back at the 8. So I actually took this trade. I'll tell you why, because I just negated these 2 bars out in my mind and used these 3 bars as my base. And as you notice, this third bar, if you negated these, is at the 8. Now, it didn't work out great, but it didn't totally fail. So I got in above. The thing about the base, like I said, you want to enter above the base, and you want to put your stop below the lowest part of the base, which in this case, I used this one, which was 38.17. If you wanted to be really proper and safer, if you wanted to include these in your base, that would be your stop below what, 39, Yeah, 39.08 both times. So that's, you could have done that. It doesn't matter anyway because it triggered above 33.36, 39.36. We gave it 3 cents to 39.36, and it triggered. So then I was happy. I got a first red bar here, and it was 39.45 was the low. So I put my stop 3 cents below that. That's our first red bar. We're just following the rules here. So 39.45 low. We're going to put a stop at 39.42. We don't get stopped out here, but we get stopped out here. Now you're saying, well, Rob, you bought in at 39.36 and you sold at 39.42. That's 6 cents you made there. Well, it's more of a risk management thing. I mean, it was failing. It told me it was going to fail. I mean, it obviously did. I was actually looking at this bar as a pullback. So there's 1, 2, 3. Even though we got stopped out on this bar, it was still trending down, even 4 bars, and then maybe even a reversal. The 20, oops, sorry, the 20 is rising, but the 8 is still kind of rising. At the time it was. So I actually put in an order here. I think it was 42. 39.39 is the high. 39.42 I would have been in. But this next bar, that's another thing. You got to wait till these bars are done, and it's always the next bar that you enter in on. So just keep that in mind. You want to wait and buy it. These patterns only work in the right environment and really on the next bar. So you don't want to wait, 5 bars for that thing to get breached. A lot of things can happen, in that time. So if this bar doesn't trigger, you're out of the trade. If this bar goes below what would have been your stop before it triggers, nix that trade too. So it's all dependent on this next bar. Anyway, it doesn't trigger me by a cent, so thank you. Then it goes down. Here's another 3 bars trending. And this bar I did get on. I did get in, actually. I saw the 20 was still rising. The 8 was definitely not in my favor. Not sure that was the best trade, but I was following kind of the protocol into this. It was a little below it. So anyway, 39.28 was the entry, and that was the high of this bar. I got in at 39.31. It triggered on this bar. So then I'm waiting for the next bar. Oh, that's another thing too. So on the bar that you enter on, you don't count that as a red bar. If you get stopped out below your low here, then that was a failed trade. But don't treat your entry bar. I entered on this bar above this point. Don't treat that as a red bar. But this bar definitely was a red bar. So 39.22. And go bring down 3 cents. 39.19 was my new stop. Now again, you're saying, Rob, you got in up here at 38 or 39.31. You're already giving up and going down to 19 cents. Well, yeah, because my original stop was below here. 39.16, give it 3 cents. 39.13. Depends on how much you're investing. 6 cents could be a lot. And also, I thought it was starting to fail, especially with this, this 8-day bar was failing, and the red bar was starting to kind of flatten out. So anyway, we're in below this. 39.22 is the low. 39.19 is our new stop. It doesn't get there, and we get a pretty decent bar that pretty much saves us. This bar, another red bar, 39.36. So we're going to give it 3 cents to the bottom there. We'll call it 39.33 is our new stop. We get stopped out there, yeah. Yeah, so ended up making 2 cents on that, I believe. And then it popped a little bit. I wouldn't say I was mad, but I was thinking, man, I got stopped out by a penny, and it went up to like 50, I think, 52, 39.52. Well, it obviously didn't go much further than that. And then here's another kind of maybe buy pattern or 1, 2, 3, a pullback, but it's not pulling back to anything. If anything, it's maybe setting up on the TQs, but nothing really happened from here on out. 1, 2, that wasn't a good enough pullback, and 1, 2, then no pattern really emerged from there. So that's kind of how I trade the Qs. And like I said, the SQs is like shorting the Qs, but you don't have to short it and put it, borrow money. And the TQs means, you betting on the Qs going up. So that's why we flip them around. As you can see, they're complete mirror images of each other. So when one's doing well, we can always hop to the other chart and hop on some strength. Another thing to notice here, we didn't got in this one, but when I mean railroad tracks, I mean this is what I mean by railroad tracks. The 20 and the 8 are kind of moving in unison. You want them to be as equal as possible, and really 45-degree angle is optimal. If it's going too much up, it's getting climactic. If it's going not so much, I guess it could grind, but 45-degree, railroad tracks like these guys are kind of railroad tracking. This is a very powerful trough right here. Just very, very powerful momentum move. So, all right, I've talked enough, but that's the gist of it. I'm gonna come in with some more videos here soon, explaining candlesticks and the moving averages a little more, and also how this strategy can be used on different time charts. Daily, weekly, hourly, but it kind of goes well with any time that you have on your chart. So anyway, if you like this, like it. Hopefully you subscribe because I got more coming, and I hope this is helpful and good way to minimize risk and maximize gain by really just following a pretty simple strategy. So hope you got something from this. You guys have a good day.